This is Don DeBartolo, a senior commodity broker and market strategist with Daniels Trading in Chicago. I'm also the trader behind the Trade Spotlight advisory service. Trade Spotlight is three segments, but broken into one advisory. Got the Trade Spotlight futures, commodity options, and future spreads. I will be covering all three segments in today's video. This is Beyond the Spotlight, a video that spotlights two or three markets that may become trading opportunities for this week. This week begins on Monday, July 19th, 2021. Please pause the video and read the disclosures to understand the risks involved with futures and commodity options trading. Let's jump right in. This is November 2021 soybean futures contract. There is the makings of a head and shoulders formation. The left shoulder with a high of 1461. Then you had the sell-off and retracement where the market created the 12-month contract high right there. That was on June 7th at 1480 even. Then the big sell-off, a bit of a rally. Most of it was on the crop report. Recently we had a pullback and then another rally. You can see in today's trading activity starting to sell off after hitting a potential resistance level up here, just about 1420, 1425 price range. My MACD indicator, this is my trend indicator, is rather flat, and that kind of makes sense. You can see we're somewhat range bound, even though we've had some volatility outside of the range. For the most part, we're within this range. You can see there's a 50-day moving average at 1372, a 20-day moving average at 1340. They're starting to consolidate a bit. My momentum indicator, this is a stochastics, is showing that the market has some downside momentum, starting to hook over. I'm looking for an opportunity to short this contract. With the futures contract, we can look to sell on a break of today's low and that 50-day moving average, again at 1372 and 1/8 cents, or this lower trend line that has several touches going back to the middle of June. That is a stronger signal, a close of a lower trend line. I'm going to look to the options market to trade this opportunity. Soybeans can be volatile. You can see that from some of these big trading ranges on the chart. By using put options, we can anticipate the breakout below today's low and that lower trend line and limit our risk. There's no margin requirement using outright puts or a put spread. So that'll be a trade recommendation that I send out this evening in soybeans. So if you're already a subscriber, you'll get that trade. Contact me directly if you have any questions. If you're not a subscriber, I'll show you later on how to get on the list. You can get that trade recommendation right away. Moving along to the next chart, this is October 2021 lean hogs. Now we already have a working order in this market, but it hasn't been filled yet. That trade recommendation was sent out on Thursday, July 15th. So I wanted to bring this back up because there is no fill. So if you missed the opportunity to put in the entry, it looks like that they may come this week. You can see looking to sell on a break of this pivot point low. There's that blue ellipse. That pivot point low is 87.67.5. There's an 89-day moving average at 88.21.3. So I'm looking for a break of that level to sell the futures contract. So get a stop order working below there. Since I recommended the trade, had a couple up days, and now the market is selling off today. One thing I will point out, I will adjust my stop loss on a fill. So right now I have the stop above these recent highs here, but you can see on Monday, today, the new high was 91. Friday session high was 90.90. So I'd like to be on the other side of that potential resistance level. So the adjust will be moved up to just above 91. That's not taking on much more risk than I already am on this trade. The stop right now is 90.60. So you're talking maybe another 45, 50, 55 points. Right now, the initial risk is $1,175. On the trade, the downside target is a wave projection. So essentially, replicating this wave off of this high, that can be adjusted too. Now that I look at this, I can adjust to today's high, the 91 even high, and that will just bring our target up slightly on this trade. But if you're not in the trade, check your email or contact me directly to get that recommendation, because that's setting up, I think, for this week for the breakout to get short this futures market. And the third market I want to take a look at is heating oil. For this market, I'm looking at setting up a futures spread. So this is buying and selling a heating oil futures contract, but in different months. For this particular chart, this would be buying the October contract, selling the February contract. As of late, we saw the energies have really sold off. We were just in a crude oil spread that we liquidated today for a profit. Looking at another energy spread in heating oil, but I am looking to go long the spread. Right now it looks like we're selling off. That's great, but I just don't want to sell the spread here. Seasonally, actually supposed to be long the spread. This is the time of year when you start to buy heating oil futures, those deferred months. Right now, this looks like a downside movement. We had the big bar here today. Market closed below a 20-day moving average. I'm looking for the market to trade down to this lower support level that comes in about 97, and we're last at 131. Perhaps even break through there. There is a 50-day moving average sitting at 97 even. So that could act as a support level. So I like to see the market get down to at least there, but then I want to see these indicators hook over. I want to see my trend indicator hooked up. I want to see momentum hooked up. You can see both are kind of down right now. So it's not the right time to be buying the spread. I don't want to sell the spread at this time though, because I don't want to go against the seasonal on this one. So just keep this on the radar. This could set up pretty quickly in heating oil, the way the energies trade. So just want to get this on your radar for a potential trade later this week. This would be a future spread trade in heating oil. Okay, here's a quick look at what the Trade Spotlight Advisory Service looks like. This was an email that was sent out a bit ago, but this is from the spreads segment. You get the timestamp when the trade was sent, a write-up of the trade, the precise entry and exit orders, so you know my risk reward parameters. Welcome to tweak them to fit your own trading style. This essentially just gives you the blueprint. Any print information like margins and a chart that you can click to enlarge so you can see what I see. If you're not a subscriber to Trade Spotlight, I encourage you to do so. Go to danielstrading.com, click on the advisories tab, and then under technical analysis, you'll find the Trade Spotlight. You can read more, see recent posts, hit the orange subscribe button to set up your subscription. I provide a free 90-day trial. I believe that gives you enough time to learn my trading style and see the performance over 90 days. If you're a client of mine or the firm, it's a free service to going forward. Otherwise, after 90 days, there is a subscription fee. Here is all my contact information. If you have any questions on current positions or trade recommendations, the charts I reviewed today, or just the markets in general, thank you for taking the time to watch and listen. Truly appreciate it. Happy trading.